It's interesting. We're now reaching a peak that we call phase 3 pricing, where it's the most critical because that's where you get all the people coming in, don't know what they're doing. They're buying right at the top. Phase 3 pricing. They do it all the time. Did it with the dot-com, housing con. Now they're doing it again. I'll get in there. I'm going to show them. And it's where they feel euphoria. Nothing go wrong. The market will never come down again. Well, they have no clue what pushed the market up. And since 2008 to where we are today, almost 15 years later, it was all fake. A tremendous amount of money. This is a big debt bubble. That's what we have, a debt bubble. Remember, our economy in the past 15 years has been driven by debt, not productivity. Remember, productivity builds a strong economy. When you produce, you have a strong economy. But instead of producing, they decided in 2008 to print money, replace production with money. That's simple. All they would do is print this money, go to the banks. At that time, 2008, 2009, 2010, they were almost broke. And they said, here, we're going to take $10 million, Mr. Banker, and we're going to buy all your garbage, your mortgages, your treasuries. And the bank looked down and said, yeah, but they're not worth $10 million. They're only worth like maybe $200,000. Don't worry, we're going to do it anyways. We're going to take that money, all that stuff, put on our balance sheet. We're going to give you the money. Now here's what we want you to do. We want you to go to the CEOs of the largest companies and tell them they can have that money. It's zero interest. Don't have to pay any money. But they got to do something for us. Just buy their own shares, called stock buyback. Stock buyback, once illegal, it's prosperity without productivity. So by taking production and moving it over here and say, we'll just take all this money and we'll drive a stock market with money, buying treasuries so we can bring interest rates down. The Fed, they can take their short-term rate, bring it down to zero. And all the CEO had to do is keep on buying his own shares. And the stock prices start to roar, but no productivity. And that's the danger. So when Biden started the campaign, remember after Trump, he was talking about, hey, I'm going to really help out the forgotten middle class. I'm going to take care of them. Oh, that didn't happen. Now, the middle class is the backbone of our nation. We know that. They're the ones that create small businesses, and it's the small businesses that are the backbone of the nation. That's where all our jobs come from. Biden didn't do any of that. But let's put that thought on hold for a moment, and let's take a look at the market. Now you understand that, let's look at the market. So first of all, let's take a look at this little chart. This is money supply. Look at the money they put into our system since 2008. This was Obama. Remember, Obama didn't want to go into a recession. It was his idea and Bernanke's idea to forget, productivity. Let's just go straight to the stock market. If we push that market up, we push those stock prices up of these companies without earnings. People don't know the difference. It's like Obama. Remember how he got his health care program together? Let's pass it before anybody reads it. Once we pass it, then you can read it. Well, they did the same thing. People had no idea what was going on. All of a sudden, they see the stock market going up. Wow, look at this. Boy, we're prosperous. Oh, and interest rates were at zero. They could go buy a car. They could buy whatever they want to buy. Oh, God, everybody was rich. But they were building a debt bubble. This is how they do it. Here in 2008, take a look at this chart right here. They went from $6.5 trillion all the way up. Look at the money they put in the system. 21 trillion. 21 trillion. From 6 to 21 trillion. Now, what happened after that? So as that money is going in the system, here's the stock market. Look what's going on with the stock market. Going straight up until it hit 2018. And when it hit 2018 right here, things started to fall apart. That was the first pullback in the market. Because remember, we're not producing anything. Inflation started to run rapid because all you do is print money. That's inflationary. You destroy the dollar, it's all inflation. Then we had another big pullback here. So we had all these pullbacks. We had about 4 different pullbacks. But they wouldn't let any of the pullbacks work. They would go and interfere. Every time a pullback pulled back between 10 and 30%, they'd make sure it didn't go into a crash. They interfered into each crash by, again, going and getting some more money supply. They also did something else. They brought interest rates down to zero. Now, when they brought interest rates down to zero, as I said, all these corporations got the money from the bank and kept buying their own stock, and their stock prices shot up, and they weren't producing anything. The economy wasn't growing. All was growing was the stock market. Now we're at a peak after 15 years. In fact, the last time we had a little pullback, about a 10% pullback, was in 2000. right here, October 2023. They rallied the market to where we are today, about 25%. But again, remember, on an economy where corporate profits from 2022 dropped from 285 billion to 49 billion. Now listen to this. They're building a fake rally, a bubble with all this money, but at the same time, corporate profits are dropping from 285 billion down to 49 billion. Are you kidding me? Because why? Because interest rates now have started to go up. So it was costing corporations $2 trillion to borrow money. Now it's costing them $12 trillion. Remember, they're getting money for near zero interest rates, no more. Today, remember, the Fed rate's 5%, then they add on another couple points, so they're paying 7-8%. So now corporations, corporate profits are dropping that severely because of the cost of money. The reason we have this rally, this last rally, is because they kept saying they're going to have rate cuts. We're going to keep cutting rates. And it was a lie. They couldn't cut rates because inflation kept going up. Matter of fact, under Trump, inflation, remember, it was about 2% a year or 7% over 4 years. But under Biden, it doubled. It doubled. In fact, under Biden, it was 5% a year, 17% over 4 years instead of 7%. So our inflation's increasing, corporate profits are diminishing, interest rates are at 5.3%, the Fed rate. So you got interest increasing, inflation increasing. It doesn't work. But everybody believes we're just going to keep going higher and higher. It's different this time, but it's not. Because remember, another problem we're having is not only with the inflation, but when you take a look at wages, our wages are 4 times weaker now under Biden than Trump. Also, you take a look at the GDP, our growth, our economic growth. Our economic growth is 3.2%. That's phony. But more important is look at the GDI instead of GDP, because the GDI measures, remember, our income, all income, government's income, our wages, salaries, corporate profits. And guess what? Under Trump, it was 2.3%. The income today has dropped from 2.3% to 0.5%. So our wages are 4 times weaker under Biden than Trump. The amount of GDI has dropped from 2.3% to 0.5%. Again, that's income. That's all the income, corporate profits, wages, everything. We're going the wrong way. So, in fact, what's happening is people are paying 20% more today for the same food they purchased the day Biden got into office. And they're also, remember, paying $1,261 a month or $16,000 a year more under Biden than Trump. So we're in deep trouble. But nobody cares. All they do is look at the stock market and think the economy's got to be good because the stock market's going up. That's not true. Not true at all. So again, inflation is really hurting us, and with rates rising, they got to go up. They're not going to come down. That's a bold-faced lie. Not when you got inflation like this. We're already at 5.3%. But remember, as they took those rates from 0 to 5.3, and they're going to go up even more, it slows our productivity, slows our job growth, slows our wage growth, slows our savings growth, slows everything. Like I said, think about it. Our wages are 4 times lower today than under Trump. And again, take the GDI I just talked about, 2.3%. Biden comes in, it drops to 0.5%. So when you combine both the GDI and GDP, our economy is equivalent to what the economy was in 1929, right before the crash. So that's the truth. So what I'm telling you right now is absolutely the truth. You're not going to hear that from anybody. So here's what we've been doing. We've been making sure during this whole scam, it's just a debt bubble. It's a debt bubble. That's all it is a debt bubble. People are up to their neck in debt. Corporations up to their neck in debt. It's just one big debt bubble. When you keep printing money and give money to people almost free, when you keep doing that, something's got to break. When you keep interest rates too low for too long, it was only supposed to be for 1 year, 8 months to 1 year. It's 15 years. And Obama, Biden, Trump, nobody let us do what would have been good. Go into a recession. You got to go into a recession. You got to reset. The PE ratios of stocks are insane. The valuations are nuts. You got to reset them. See, even though recessions are painful, they reset. They're natural. You got to have them. We haven't had one in 15 years. But nobody believes we're even going to have a correction. So here's what we've been doing here at Phil's Gang, and it's been working nicely for us. We don't fight the tape. Never fight the tape. So what we've been doing is we've been buying stocks. We've been staying with the strength. Example, our banks. Take a look at this chart right here. This is the ETF for the banks, financial. Now, this is the chart that we designed here at Phil's Gang. It will identify for you what stock to buy. It's called the Pro 2. It identifies what stock to buy. It's really helpful. It turns from red to green. So we bought the banks right here, and we bought these back in November, even before that. So we caught the whole rally. Now, we knew what was going on. We know it's a debt bubble. We know we're going to have a crash that's going to be the equivalent of 50, 60%, maybe 70%. But we don't sit around and just say, oh, we're going to have a crash and do nothing. So that's what we did. So we bought the banks. Look at this. Beautiful. So we're up about 17, 20%. We also, not only do we bought energy. Look at our energy stocks when it turned green right here. When that turned green, we went and bought our energy stocks. And we had our buy signal right here. We had the crossover. There's our buy signal. Our energy stocks are up about the same, about 15, 17%, a little more. So we also went in when nobody wanted. Remember, we bought all these oil stocks. Look at these oil stocks. Look at the buy signal. See how our buy signal, how it turns green? We have a crossover over here, and this confirms it when it turns green. That's the buy signal. We designed, these are our charts. We designed them. So it tells you when to buy a stock. Makes it simple. And then we had another stock. This was Marathon. Look at this. So my point is, we stayed with oil, we stayed with banks, and we stayed with gold. We bought gold when nobody wanted gold. We bought the gold miner. So now we're at, as I said, now we're at stage 3. So at stage 3, which is the most dangerous part, is because this is where the big institutions start dumping their shares. And this is where the tourists come in, don't know anything, and they start buying those shares from the institution. So what you see is volume, but all of a sudden you don't see the pricing going up anymore, and that's going to lead to a major correction. So I think what we're going to do is first have a correction of probably about 10% is my guess, 10 to 15%. That's what we're anticipating, about 10 to 15%. So we're going to pull back. I would say we're going to pull back right about where this guy is here. That's that October low. So we're going to either pull back about 10% or we're going to pull back about maybe 10, 16%, but we're going to get rid of most of this right here. And I think what will happen, she'll pull back first, then they're going to come in. It's not going to be there long, and they're going to rally it right back up, right in time for the election. Going to rally it right back up. And then, depending on what happens in the election, that's when you'll get your big crash. So for now, we got a great opportunity to sell short. And by the way, our color-coded chart will turn red and tell us when to sell stock short. Just like they tell us, turns green, tell us when to buy them. So we're going to stay with the momentum plays until all of a sudden we get a sell signal, which will start selling short. And then again, as I said, I think once we get that little 10 or 12% pullback, we'll get another big rally, and they're going to test it back at the top, in which I think will fail, and that's when you get your big crash. So the bottom line is, since Biden took over, he did nothing for the middle class. He kept saying, the middle class, nobody's recognizing the middle class, they're lost. I'm going to take care of them. Take care of them? Are you nuts what he did to them? He destroyed our middle class, destroyed it. So, but it doesn't matter. Listen, when you're a professional investor, it doesn't matter if stocks go up or stocks go down. You've got to have the skills that when stocks go down, you know how to short them. You make money investing in stocks, but you make fortunes shorting stocks. You always have crashes. How many times have people in 401ks, they're sitting there, they think they're doing good, they feel fat and happy with their 401k and lose it all? How many times? And it's going to happen again. So why don't you do this? Why don't you join our gang, philsgang.com. For 10 days, it's free. Let us introduce you to the market. Let us introduce you to the Pro 2 chart that tells you when to buy, tells you when to sell. You're not going to have to pay for it for 10 days. You can see if it works. So that's what I think is going on in the market right now. This is one big debt bubble ready to blow up. So I'm just trying to tell you the truth. I hope it helped. We'll see you on the charts.